Hello, welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is Don Pollard, and Don is a Chartered Life Underwriter, or CLU, and also a Chartered Financial Consultant, and he's an insurance broker who's practicing in San Jose. Don has worked in the insurance industry since 1973. He's managed insurance agencies, trained agents, built employee benefits departments, and is currently a broker serving individuals and small businesses in San Jose. Don is a past president of the Silicon Valley chapter of the National Association of Insurance and Financial Advisors, and he currently represents the local chapter to the National Association in Washington, D.C. Because healthcare coverage is such a critical area, we have done a lot of programs related to it over the years. And so if you want to refer to those, you can go online to financialinsiderweekly.com. However, our conversation today is about upcoming changes. So you can't really rely on those long term, I don't think, as we're going to be discussing. And so just be aware of that. Anyway, today Don and I are going to be talking about group medical insurance for small businesses, and focusing a lot on what we think might happen now that we have a change. Today is November 22nd, 2016. Donald Trump has been elected president, but he hasn't been inaugurated yet, and so Congress hasn't had an opportunity really to do anything with the proposals yet, except for what we've seen them do in the past. Also, we want to caution our viewers that some rules for medical insurance vary from state to state, so please be sure to work with a consultant that's familiar with your own state laws. Don, thanks for joining me today.
You're welcome, Mike. Good to be here.
Okay. All right. Donald Trump has been elected president, and healthcare has been sort of the real key issue for Obama, or one of them. So what do you think is going to happen now?
Well, that's a real good question, and I think that there's lots of people that want to know that or have some insight. And certainly after 18 months of campaigning and hype and rhetoric and all of that, there is one thing that seems to be inevitable, and that is that the Affordable Care Act there will be an attempt to repeal that act. I think they would almost have to do that in light of what they campaigned on. But then again, as we've seen in this campaign, you never know what's going to happen. I don't think, and I don't think that most practitioners think that it's going to be easy to repeal the law, and the reason for that is that there are a few Democrats left, and the Republicans don't have a supermajority, so they'll need to find some Republicans that are willing to do that.
Some
Democrats that are willing to do that. However, there is another method that they've talked about, and that is this reconciliation, and that requires a lesser percentage of the representatives in order to pass the law. So
when you say reconciliation, basically what we're talking about is that the funding
is the funding.
Yeah.
Yeah. So that would be the attempt to defund the provisions of the act, i.e. the subsidies, as well as the essential benefit requirements, basically the requirements of the program. So so again. The President-elect Trump, on his interview with Leslie Stahl on 60 Minutes, referenced several things that he felt was good about the program, and so I think you can be somewhat comfortable that those will not go away. And that would be the provision that allows a person's children to stay on their plan till age 26. That seems to be agreed upon by everyone is a good idea. Pre-existing condition exclusion. This also is a provision that most people want to see remain in the program. And the interesting part about that is that the pre-existing condition exclusion is actually tied to the mandates for insurance. And the mandates are areas that I think are likely to be repealed.
Mm-hmm. Okay. So maybe we should go down then a little bit of the lines of what are some of the things that you think will be targeted for repeal?
Okay, so I think the first thing, and this is more a provision for larger employers, the split between 50 and less than 50 employees. As you recall, any company that has 50 or more full-time workers or full-time equivalent workers basically is required to provide them insurance or to pay a fine. Mm-hmm. And then, of course, penalty. The individual mandate says that every citizen mm-hmm. of the United States must have health insurance or pay a penalty. Mm-hmm. And at first the penalty wasn't anything, but now it's basically 2.5% of your household income, so it could be a substantial amount of money. So relative to the mandate going away, again, this was part of the agreement between the insurance industry and Obama that would then allow them to take in many more healthful people so that they could cover the individuals that were with the pre-existing condition exclusions. So without the mandates of some kind, it's not going to be favorable for the insurance companies to say, oh, okay, we can still take in those people. So anyway, the elimination of the employer mandate is basically going to provide employers with the opportunity to offer a plan of benefits to their employees that aren't restrictive in nature. So currently, part of the requirement under the employer mandate is that they must provide benefits, essential benefits, which is a list of 10 things that we've talked about before. So that's going to, if that is repealed, the essential benefit part is repealed, then the feeling is now employers can offer plans that have lesser benefits to some employees, mm-hmm. and that's going to create a favorable situation.
For the employers, not necessarily for the employees.
Yeah, okay, for the employers, but the theory being that they can then offer insurance to maybe to part-time people who don't have it, that kind of thing. So another area that is bipartisan in nature is the desire to repeal the Cadillac tax, and as you recall, the Cadillac tax isn't even scheduled to come into play until 2020, but it's coming up on that time, and basically that was a tax on benefits, the value of benefits in excess of a certain level that was set and prescribed. And this was a tax on the employer, so the employer was liable for this tax. Again, nobody thinks that's a good idea, Republicans or Democrats. So pretty much for sure that's going to get axed in the whole thing.
Yeah. Now, as we talk about these things about what might happen and so forth, I would just want to reiterate something we said in another interview, and that is probably these things are going to happen sometime in the future, but for 2017, because we have so many people that have already signed up, at this time on the exchanges and so forth, and employers getting their plans in place, that I wouldn't expect these changes to be effective until sometime after 2017.
Yeah, that's a good point, Mike. That basically for 2017 things are still set. The Affordable Care Act is still the law of the land, and that isn't going to change right now. The thinking is that Republicans, in order to serve the voter that they catered to, will attempt to repeal the law. When that may not be successful, then they'll begin to negotiate, and that generally provisions will probably not come into place for a couple of years. So even on the Republican website, where they have the outline of their idea for the plan, they also offer a grandfather provision for people who have the ACA type programs. If they want to keep those, that there would be some kind of a provision to do that. Now, that's not to say the insurance companies are still going to offer them, or that the prices won't, somehow escalate unbelievably high. But yeah, so they would still have that. But again, next year, 2017, no question, it's already in place. I think 2018 possible, and then
let's see where it goes from
beyond is kind of up in the air.
Yeah. Okay. So what provisions do you think might be expanded or retained, whatever, under these employer plans?
So the GOP in their proposal on their website and in their talking points and stuff, they basically have several areas that they're considering the expansion of, and the HSA, the Health Savings Account, which was a big part of President Bush's health care program. They feel that increasing the flexibility of these regulations will be a high priority. And frankly, excuse me, when the initial program came out, it was puzzling to me why they limited those back in the first place, because I thought those were a pretty good idea. Mm-hmm. And many of my clients mm-hmm. take advantage of high deductible plans. It's just the way it is. Mm-hmm. So anyway, they tightened those up. The feeling is there'll be a loosening of those, which would include the opportunity again to possibly purchase over-the-counter type medications through the HSA plan, which was, when they originally came out, that was an option that you could use. So that would be good. They feel that the HSA is a tool mm-hmm. that facilitates portability, and I would agree with that. That when you have a HSA account and you move from company to company, you're less bound because you do have that as part of your health care. The other positive thing that they're talking about, in my view, is that the current limitation for deposits to the HSA for an individual person are $3,350 in a year, and again. This can be used to either provide health care benefits for you, or it can be rolled over to the next year to provide some kind of a fund. And ultimately, that fund can either be used on a tax-preferred basis to reimburse medical expenses whenever you might have them, mm-hmm. or should you reach age 65, or when you reach age 65, you could then supplement any kind of retirement plan you had with that fund of money. So pretty flexible kind of an account, multi-use type of account. Anyway, the talk would be to increase the opportunity there to $6,550. That'd be a huge increase in that particular vein for the HSA. So I would view that as a positive outcome, and more than likely that's going to be something that is high on the agenda. So also the HRA, which is a health reimbursement account, this is an employer-based account that is employer-only contributions, can't be participated in by the employee, but the allowance of those plans to reimburse employees' premium costs mm-hmm. for insurance that they might buy. Mm-hmm. Now, this was expressly prohibited in the ACA, mm-hmm. Affordable Care Act, And it also had an effect on employer reimbursement type ideas, where the employer just reimburses the employee an amount of money that that they've shown they've paid for personal medical insurance, and they just went on their way. Well, those were again all precluded under the ACA, and the feeling is those will be now possibly come back with the expansion of the HRAs, allowing the employer to basically deposit that money, and it can be used for that. The other area that I view as really positive, and that is in the area of wellness plans. So there's been years, seems like years of discussion about wellness programs. I think everybody agrees that this is the right way to go. Try to keep employees well,
right.
As opposed to paying for them paying for the care when they get sick.
Yeah.
And there was a lot of limitations that have been placed on it. They finally came out with the final regulations in May, and one of the provisions of that program is that the employer can only incent his employee monetarily to the maximum of 30% of the cost of their medical insurance during the year. So they put an upwards cap on that. They're talking about taking that cap off, which would then, in the theory, open up the wellness program now to become more comprehensive, and certainly the incentives for employees to come in and join that plan and participate. So I look at that as a good option as well. Now, with all these good things happening, there's also something that I think is worth paying attention to, and that is this: in the GOP plan, along with these expansions and these repealings, there is also a provision that for the taxation of employer-paid benefits. Now, this has been a stalwart of our employment system since wage and price hikes, a long time ago, back in the day, if you will. And now what they're talking about is that there's not going to be any restriction on the deductibility for the employer. So it's not going to have any effect on the employer. He can still deduct whatever he pays, like it is now. But what will happen is that any amount that's deemed to be over a set amount is going to be taxable income to the employee. So as you can see, the Cadillac tax was an employer-based tax, right? It had anything to do with the employee. Yeah. This deal here has everything to do with the employee. And the employer. I mean, so it's kind of a different method, but the employer-paid health insurance has always been deductible to the employer, non-reportable to the employee.
Right. This pre-tax benefit.
Pre-tax. This would be a change, a big change.
Yeah, that's
from
a big
that.
change. Yeah.
And I think that's something we need to watch. Most practitioners, all associations that relate to benefits are against that particular piece of the provision. So.
Okay. So we have, maybe about 7 minutes left, just to give you an idea.
Okay.
Anyway, so maybe I should, let's hit this last point here, and then we'll see how the time goes.
Okay.
What are some of the main things that small employers need to be aware of?
Well, I think the key thing is, again, your point earlier, which is absolutely true. Right now, everything is business as usual. So
business as it's been we've been working into for the last 3 years.
That's right. Business as changed.
Yes.
Yeah. So, but again, lots of rhetoric, lots of hype. We'll see what happens. And then whatever happens, most practitioners feel the result will not be felt for a year or two.
Yeah.
So there is some time. I think and frankly, if everybody obviously needs to have a good broker that they work with, a good accountant that they work with, and that they, that can help them through these kinds of decisions that are going to be made. Now, as to what kind of plan and what are the benefits, as you pointed out, if we get into this selling across state lines idea, what's going to be the outcome of that? Well, we don't know. If the essential benefits portion of the mandates are repealed, then basically we're going to experience, people from New Mexico or Texas, selling policies in California that may or may not have protections. And certainly if they're cheaper, they're not going to have the same benefit structure as those plans here, because that, every time you add in a benefit, there's a cost to that. And certainly the insurance company, calculates that in. And so I think there's going to be there's going to be that question that you need to think about. I think the other piece relative to the expansion of the HRA is something that will be a relief for some people. So in the past, in order to provide medical insurance for employees, you had to have a group insurance plan. It was required because that was the law. And then those plans had to have essential benefits, therefore they cost X. Well, now, that possibly could go away. And you could be able to, your employee could actually be able to go and buy a plan, and you could actually be able to reimburse them, and that could be, operated similarly to a group insurance plan that carries with it tax-favored status.
Yeah. So this, for very small employers, this may give them flexibility that they had in providing some benefits before the healthcare reform.
Exactly.
And so they actually might experience some relief, but again, stand by, because we're not there yet, and the penalties under the current law are very severe if you do that. So any small employers out there that that you're paying for your employees' medical insurance that is not part of a group plan. One, I would say you should stop it, and second, you should see about getting some tax on legal advice and seeing if you can get some relief from the penalties. It is discretionary, so the IRS can waive penalties if you throw yourself at their mercy. But again, they've been having a lot of publicity on this over the last several years. And I know I've been hammering on my clients about it, and so they discontinued the practice. But there are some employers that don't even have a CPA; they're preparing their own taxes and so forth, and so they may not have been aware that there was a real problem here. So just be aware of that.
Well, and I'm not here to say that that's coming back. For sure.
Yeah, we don't know.
I'm saying that,
but it's a possibility.
This looks like a possibility if these expansions are, in fact, they do take place. I will say that, with all the talk and the uncertainty that we are experiencing at this point in time, what's happened to employers relative to offering insurance to their employees. And it has been on the decline, and I suspect that much of it is from a lot of the requirements that were placed relative to when you offer, you have to offer these kinds of programs. Hopefully that will turn around and get reversed moving forward. But basically, what we experience now is, over the last from 2008 up till 2015. For small employers with 10 or less employees, that has dropped about 35% for them offering benefits.
From 35%?
Well, 35% to 22%, which is roughly 36%.
Okay.
36% drops.
Okay.
Thank you for clarifying that. And then in the 10 to 24 area, the Employee Benefits Research Institute tells us that that used to be 61%, now it's 48.9%, so that's a 25% drop there. And then for 25 to 99 employees, it was 81.3% provided that coverage in 2008, and that's dropped down to 73%, which is a 10% dip. So as the companies get bigger, they know that they need to have those benefit plans to attract and retain their key employees. But as the smaller employer who might want to do that, then
they haven't felt that they could afford it.
Yeah, exactly. So hopefully now with some of these things that probably will happen, we'll have an opportunity to reverse that trend.
Okay, Don, thanks so
Mike,
much for coming today, sharing this important information with us. Again, folks, this is a moving target. Mr. Trump hasn't even been inaugurated yet. We'll see what happens once he gets in office and what Congress does with this. We'll see you next time on Financial Insider Weekly.